Hey, I'm Matt McCall. Welcome back to Making Money with Matt McCall, the brand new relaunch of the podcast. I mean, look at this studio, folks. This is absolutely amazing. Looking good. It's got my blue, has my eyes popping. I mean, it can't ask for much more. But we're coming to you today. It is Tuesday. It is November 16th. I mean, my goodness, I feel like it's been so long. I feel like my long lost love is finally back. But we're back. We're strong. The show's going to be very similar, but even better. We have so much coming at you today. I'm going to catch you up on what's happened the last few months since you saw me last. We're going to talk about the markets today, which, looking at it right now, not far from an all-time high, even though everybody's still bearish. We're going to talk about an experience I had this weekend that might just relate some investment ideas. All this, Bitcoin, cryptos, the roaring 2020s, all coming up right now on Making Money with Matt McCall. All right, folks, we have a huge show in front of you. And I talk fast typically, but, that's really because I'm from outside Philly. It's how we got to do it. But today we really got to talk fast because we got a lot of stuff to cover. We're going to start with just the markets right now. And we got this fancy little thing over here. I could change to a full screen. Watch this. There's the S&P 500. The S&P 500 right now, as I mentioned, it's Tuesday. It's around 10:15 or so East Coast time. The S&P up right now, 12 and change, a few clicks from an all-time closing high, folks. Let me show you the NASDAQ just to show you that this isn't a one-off. Here's the NASDAQ. Look at this, folks. Just a few clicks off an all-time high. The reason I wanted to show you that is because it gives you an idea of where the market's been going since I left you last. And when I left you last, how did I feel? Bullish. And I'm still extremely bullish on what I'm calling and have been calling the roaring 2020s. And yes, for all of you that have been asking about the book, I'm almost done with it. The roaring 2020s is the name of it. I have the table of contents back there. I'm not showing you yet, but many of you know what's in it. But I have the table of contents back there. So let's cover what's been going on in the last couple of months. Well, the big boogeyman in the room right now is what? The I word, inflation. Inflation is that boogeyman that I was listening to Bloomberg coming into the office today, listening to it on the radio. That smug British guy, my God, he annoys the hell out of me. Everything is so negative. Retail sales were actually decent today. So negative. Talks about inflation every day like it's ending the world. Talking about gas prices going up in California. The reason gas prices are so high in California is because the government out there stinks. That's why they're so high in California. Yeah, gas prices are higher, but it has to do with California, not the rest of the country. So inflation, just to give you an idea though, it is at a 30-year high. The last number that came out, 6.2% year over year. High. Core, when you take out food and energy, was up 4.6% year over year. And yes, I got to tell you, you're looking at these numbers, they are high, folks. I mean, there's nothing you can say about that. But I do the grocery shopping. I take care of the bills in my household. To me, for the last decade plus, we've been having inflation. It just was not reflected in the government numbers. And the kicker here is, do you know one of the best performing asset classes during inflationary times? Stocks. Quality stocks do better during inflationary times than most other asset classes. If you turn on television or look at the internet or listen to the radio, some talking head's going to tell you the exact opposite. I've run the numbers. I'm telling you, stocks do better in inflationary times than almost every other asset class. So forget about it. It sucks that it's going to cost you more to buy a turkey this year for Thanksgiving. But the reality is your stock should be going up, as I just showed you, to more than cover how much you're paying for that bird. Interest rates. We have the 10-year right now around 1.6, 1.62%. Again, people are freaking out because it's more than doubled from the low that we had during the pandemic. What they leave out is the fact that 10-year right now is almost the exact same place it was before the pandemic began. So why wouldn't we be back to where we are? Again, it's the media spinning this stuff because they have nothing else to talk about. Earnings. Why do companies go up? Why do companies go higher? Because they make more money. I've always said investing is very simple. When you're buying into a company, not a ticker symbol, not a stock, but you're buying a company. You can call it a stock. When you're buying a company, though, you have to ask yourself, will that company be bigger in 3, 5, 7, 10 years from now? If you can answer yes, there's a great chance the price of that company, the stock, will be much higher at the same time. Okay? It's pretty simple, folks. What drives companies to get bigger? Earnings. They make more money. Let's look at the quarterly earnings right now. The third quarter, almost done, about 90% are in. What's called blended is all the companies that are reported so far and the estimates that are left. Up 17.3% revenue. Revenue up 17.3% in the third quarter over last year. I know. The third quarter of last year sucked. So that's why. I get that. It's not a problem. But still, that's impressive, folks. Earnings per share. 39% year over year again. But Matt, the third quarter of last year sucked. It did, but still 39%. These quarterly numbers are the best quarterly numbers ever. If you're making more money in corporate America than ever, then the stock market should be at a high as well. It correlates pretty easily, folks. This is not rocket science. So when people tell you the market shouldn't be at a high, ask them why. If they say inflation, tell them stocks do well in inflation times. If they say interest rates, they're the same place they were before the pandemic started. If they say earnings, say we're at the best level ever. So please, folks, do not get scared out of the market or sit on the sidelines because of all the BS that you're hearing. Because I just cleared up the 3 big boogeymen that are hanging over the market, that black cloud. 2 other things I want to talk about that's happened in the last couple of months. One that just happened recently, and I'll show you here on the chart, is we've had a major breakout in the small caps. And many of you know I'm a small cap freak. So let me pull up here the iShares Russell 2000. And I have a nice line drawn here. And this is an ETF of small mid-cap stocks. You can see this line. That's what you call resistance. You see how it keeps running into that line? We broke above that line, which was an all-time high. For the first time ever, I even wrote in there, major breakout. After you run up, a lot of times you consolidate above it. This is such a great buying opportunity for small caps. And let me zoom out just to show you this. Look at this, folks. We were stuck there for about a year, couldn't move, and now a major breakout. Look what happened last time we broke above a level like that. Took off. I think we're setting up for a very similar rally in the small cap stocks. And this is big news. Again, you're not hearing in the mainstream media. The last thing I'm going to talk about before we get into some cool stories and some stocks is cryptos. I happened to be a day here where Bitcoin had a sell-off this morning, and I don't like to see that. But again, let's be realistic, because last I checked a few minutes ago, Bitcoin was at $61,000 a token. And the last time I talked, he was probably around $40,000 a token. So we have had a hell of a run in the last couple of months. We're about a couple of weeks off an all-time high. We got close to 70,000. Folks, it doesn't go straight up. I think that we pulled actually below 60,000, around 59, I think, 58 and change this morning. What a great buying opportunity. If you could buy anywhere below 60, I think it's a great long term. I still think we could hit 100,000 by the end of this calendar year, which is only 6-7 weeks away. I think it's almost guaranteed in the next 6 months. And I think it goes well above that. I think the altcoins are going to continue to do well. I have a lot of my personal money in Bitcoin and in altcoins as well. So I put my money where my mouth is. I think it's a great, great opportunity. And if you're looking for an inflation hedge outside of quality stocks I just talked about, Bitcoin to me is one of them. And I was on Danny Cambone's show, and twice, and both times I said gold is dead. And my God, literally over 750 comments of people telling me I'm an idiot. Trust me, I've been told my whole life I'm an idiot. It doesn't bother me because I can't be that dumb if I came from where I am and I just drove in a very nice car today. I have quite a few bucks in my bank account. Well, hard work, sure, but I can't be that big of an idiot. I will tell you this. Gold is dead. I don't care what you say. You bought gold 10 years ago. You know where it is today? The same damn price. What should be doing fantastic right now with inflation booming? Gold. It's not doing it. So again, I'm going to piss a couple of people off with this, but it is what it is. I don't like gold. I'm here to try to help you. I'm not here to make you feel good. If you want somebody to feel good, go watch somebody else. Go watch Fox News or MSNBC or whatever way you lean. They'll make you feel good. The roaring 2020s. This is something that is really the thesis of my investment theme. It has been for several years, and it will be going forward. It's going to be the thesis of this show, folks. It's going to be all about investing in some mega trends that, regardless of pandemics, regardless of government action, regardless of regulations, of bear markets, of recessions, of inflation, of interest rates, etc., are going to continue to flourish and innovate and revolutionize the world. Electric vehicles. If you're pissed off that gas is at an all-time high in California, here's an alternative. Buy an electric vehicle. Artificial intelligence. It's here, but it's spreading. The metaverse. Facebook just changed its name to Meta. The metaverse is going to be huge. That includes AR, augmented reality, virtual reality, Internet of Things, 5G, connectivity, genomics. All these things coming together, folks. Flying cars even. We are going to be talking about that in the show throughout. And I love sharing ideas. So we're going to talk about stocks here in a second. But the crux of this show is the roaring 2020s. Now, I'm going to tell you two quick stories that happened to me. And this is going to, again, the theme of today's show is to make sure you all are bullish and on the same page as me. And you're positive on the stock market and the economy. So let's back up about 2 weeks ago. We were in Vegas for the Stansberry Investor Conference, the annual conference, which was fantastic. We had a great crowd. If you didn't come this year, I highly recommend you come next year. It is, again, in October. Next year, it's going to be in Boston. So the East Coast people, be great for you if you don't want to deal with Vegas. 6 days in Vegas for me, that is near death. I had to get the hell out of there. I actually changed my flight a little bit earlier. But Boston, I mean, heck, we'll drink some pints, eat some, I can't do the Boston accent. Every time I do a Boston accent, it comes out like Long Island or something, or Philly. But anyway, you know what I'm saying. Like Mark Wahlberg. Maybe we're running Mark Wahlberg up there. Big fan of the Funky Bunch. But when I was out there, I was doing my boots on the ground like I do. Like, I learned from Peter Lynch many, many years ago. I like to go and, to the stores and see what's doing well. So I went into the Chanel store. We know Chanel is very high end. The little thing they have to make sure you look okay, let you in. I had my suit on, so they let me right in. So I walk in there and looking at bags, asking questions with a colleague of mine. And they had like zero inventory, nothing. So I'm talking to the sales associate. And I asked her, I said, who's buying all this stuff? Is it Americans? Is it Asian people coming over? Because that's been a big, Asian people tend to love very high-end goods. And a lot of times they'll come to Vegas to gamble and buy stuff. And that's just how it is. So no, it wasn't that. She said, it's a little bit of everything. And she said, even during the times, the pandemic, when things were bad and casinos really weren't hopping, they were still doing well. This was a shop that was in the Wynn Encore, between the Wynn and Wynn Encore, the actual Chanel store. She told me that even during that time, things were flying off the shelf. People were bringing their stimulus money in, which isn't the best move for stimulus money, I'll tell you that. But bringing in, as she called it, their stimmy money. That must be a big stimulus to buy a Chanel bag because they're not cheap. My point is, people are buying goods. This past weekend, to piggyback on that story, many of you know I bought my first car last year. I got a Porsche Macan, a little SUV. It's like a soccer mom car. I don't know why I got it. But it's cool. It's got a red interior, so it makes me kind of cool, I guess. I don't know. Anyway, the heated seats were nice this morning driving to the office. I went to look at the electric Porsche, the Taycan, they call it. It's like a sedan. Went to two Porsche dealerships outside of Baltimore. Both of them had zero new inventory, zero cars. The earliest I could get one is January, and I had to pre-order it without even driving or looking at it. That tells you something, folks. And Matt, you're gonna say, Matt, well, this is just high-end stuff. It's not. And it's not just a supply chain issue, folks. There is demand for goods and services going on. The economy is strong. Again, I don't care what your neighbor tells you or what you hear on television. This economy is strong. Look around. Use your common sense, folks. People are spending money. The fact that people don't want to go to work, I don't want to comment on that, but there's jobs out there. If you want a job and you're hardworking, it may not be your ideal job, but there are jobs out there, folks. So let's take a look because, this is all about making money, right? So let's take a look here. let's take a look at Porsche, because Porsche trades, you can buy it here in the United States under the symbol POAHY. Stock has not done much over the last few months, drifting lower. To me, this looks like a great buying opportunity. I mean, my goodness, you look at this, and Porsche, this is called Porsche Holdings. The way it works is a little confusing. They actually own a 53.3% stake in Volkswagen, which is also publicly traded. So Volkswagen owns everything from VW, Volkswagen, to Porsche, obviously, Audi, Bentley, Bugatti, Lamborghini, Ducati. So they own a bunch of brands. They actually merged back in 2011, and that's how it became this. But by buying into Porsche, POAHY, gives you the opportunity to own all of these brands. And just to give you an idea, when I said there's no cars available, according to the CPI, do you know how much the price of new cars were up the last 12 months? 9.8%. So what happens then if you can't buy a new car? You buy a used car, right? Of course, that's what I thought. New used cars over the last 12 months are up 26.4%. Again, folks, this isn't all supply chain. This is demand for cars. What are the two most expensive purchases you'll make in your life? Likely a home and likely a car right after that. Unless you're buying a boat or something, you're uber rich. But a home and a car. And both are in demand like you would not believe. I'm trying to buy a house in Nashville right now. I can't find one. I found one, and it was sold before it even went on the market. Somebody from California bought it without even going to the damn house. Sure, people say that's bubblicious. It could be, but there's demand again because the economy is good, interest rates are low, mortgage rates are low. There's a reason for this. Think logically. Don't always think negative. So Porsche, there's an example. And then Volkswagen, just to give you an example as well, is right here. And very similar looking chart because it's very similar looking company. Both track the same. Again, I think they both look really good right here. And again, not just the story I showed you, but there's other stuff. So let's go back to that Chanel story for a moment and take a look at some of these, if you will, let's call them luxury, right? Hermes. Hermes is trading at a new all-time high today. This is a $179 billion company, folks. Its revenue is expected to grow 9.5% annually going forward, earning 7.4%. It's not a cheap company, but again, it shows you demand for luxury. What about LV? LVMUY is a symbol. LVMH. Think of Dom Perignon, Louvre. Think of Louis Vuitton, Da Vinci. They also make watches. They actually make yachts. $414 billion company. It's about half the valuation of Hermes, so I like it a little better. But again, trading right at an all-time high. What about Cartier? I mean, Cartier's not a bad brand, is it? Look at this stock. Look at this stock. Just in the last couple of months, it's up almost 50%, folks. Again, to a new all-time high, $85 billion company. Little less expensive. The most attractive of them all just happens to be my favorite. Kering is the name of the company. But we all know what my favorite brand is, right? My white shoes, Gucci. So they make Gucci, and this is pulled back. And it's an $85 billion company. They also, $96 billion company. They also have Saint Laurent, Balenciaga. And I got to tell you, I just got an email yesterday. And the guys will make fun of me because it's called a mashup. It's a mashup between Gucci and Balenciaga. The sneakers were $1,300. But if anybody knows me, you know I love my shoes and my sneakers. Even though I have dirty shoes on right now, I won't show you. But yes, I love them. I'm not going to buy them because I'm investing my money because I love the market right here. But again, those are examples right there of ways to buy into these European luxury brands that I don't see ending anytime soon. And think about this. A big demand of those brands comes from Asia. And the Asian economy is just really starting to get ramping back up. Retail sales came out in the last couple of days for China, and they're actually better than expected. So as that gets better, you will see these brands do so much better as well. So that's something to keep an eye on. And then let's go back to the markets here for a minute because I just want to show you one more time this small cap. Because folks, this is one of the best looking charts you're probably ever going to see. And I'm going to zoom in here a little bit and just show you exactly what I mean. This is, again, think about resistance. My first book I wrote was all about technical analysis. It keeps hitting this level. That means every time I get here, the sellers take over. We finally, big volume broke through, and now we're consolidating. This is one of the greatest buy charts you'll ever see. And this is on the broad Russell 2000 small and mid cap index, folks. This is exactly what we want to see. This is exactly why I launched a brand new newsletter with Stansberry called Matt McCall's MegaTrend Investor, because we look at small companies that fit into this category. And we launched a portfolio. We have over 10 stocks in there already. We launched it just in the last month, and the stocks are rocking and rolling and already crushing the market. And we got some really big winners. We have some great buy opportunities still ready to go in there. Also, we have the McCall report, which we just launched as well. And that can get you in as low as $100, folks, $99 to get in for a year. We have already several stocks in there. We are going to put a new one in a couple of weeks. Every month you get a brand new stock. And following these trends, following all these big trends that I talk about are going to be in this. And if you followed me in the past, don't worry. My views haven't changed. I'm under another umbrella, but views haven't changed, folks. The roaring 2020s are as strong today, if not stronger, than they were the last time that you saw me. And they're only going to get stronger as we go forward. So again, I'm so happy to be back behind the microphone, behind the computer, in front of you, in front of your screens. I know your significant other's now mad because they actually had you back twice a week and didn't have to listen to my nasally voice coming over the radio or the YouTube or wherever the hell you watch me. But I'm thanking you all for sticking around, following me, giving me time to get to where I need to be. And again, the show behind me, as you can see, Making Money with Matt McCall, because at the end of the day, there's a few things we want to accomplish. We want to have fun. We want to educate you, and we want to make money. And that's exactly why we're here. So again, I hope everybody has a wonderful, wonderful rest of your week. I'm Matt McCall. Thanks for watching. Until next time.